Welcome to the Trending Tokens podcast with Jake Vale and Jeff Pulver. Jake is the CMO of Tokens and Transactive Energy for Sunfura, an independent power provider using blockchain to revolutionize the energy markets and consults in the security token space. Jeff is an internet pioneer known for his work in VoIP. He has invested in more than 400 blockchain startups and was the co-founder of Debrief, which combines communication networks and the power of blockchain in order to achieve truly private and secure communications for all. Today we spoke with Alexander Blum, co-founder and COO of Two Prime. Two Prime is launching a new asset class, the FF Accretive Token, and a new exchange offering, the Continuous Token Offering. All opinions on trending tokens are the opinions of Jake, Jeff, and the guests. Nothing should be taken as legal or trading advice. The content of this podcast is for informational and educational purposes only. We hope you enjoy this episode. All right, we're here today with Alex, COO of Two Prime and host of the podcast, The Executioners. He's been working in the blockchain space for quite a while. I've known him for about 2 years. Probably best to let him give us some background and I don't know, just let us know what brought you into the space and what motivates you to work in this space.
Yeah, well, first of all, thanks. I'm really grateful that you had the interest to chat with me. It's good to get back in touch with both of you guys. Yeah, I think my professional life has been a winding path of a lot of different stuff. But I think most relevant to blockchain, I in 2013 was consulting for a VC fund that was early on interested in Bitcoin mining, and some of the earlier technical applications of blockchain. And basically, I was in grad school, and they threw me out of pity, consulting work to do for them because I had no money. And then as the industry matured, I worked at some traditional hedge funds and traditional VC funds, and then consulted for the World Economic Forum, the Gates Foundation, and some others in the blockchain space. And, obviously in 2016, 17 became much more of an easy way to make a career out of it. And so I was consulting for a number of more people on the professional side, trying to figure out how to basically, I think a lot of people saw ICOs and said, man, this seems like a good way to make money. And then because they were more professional, kind of went down that path in the US and saw that, oh, this seems like an unregistered security. And so I worked with Science Inc., which did one of the first ever security token offerings as a consultant, and then was working with a different group of guys who were starting a software company. They were previously out of Fortress Investments, private equity, and they ended up getting traditional funding, but were walking down the path of doing a security token offering, and then saw just the same kind of needs over and over of people trying to create compliant ICOs, essentially security token offerings, and thought I could make a software company out of it that could provide compliance software and also offer broker-dealer services, and then proceeded to do that. We can get into it, but saw that, I think it's really difficult to find strong use cases at this point for retail security token offerings. And subsequent to that company that we raised a few $1 million, subsequent was not able to sustain itself. One of the investors in that company, his name was Dr. Mark Fleury, who was the previous founder of JBoss, a software company acquired for a few $100 million by Red Hat. He was very interested in this space and basically joined up forces and have been figuring out other ways to create fund formation and kind of catalyze some of the capital formation potential of blockchain, but in a way that isn't reckless or misallocation of capital that I think a lot of ICOs have participated in. Now we're here today.
Got it.
So I have a bunch of questions, but I will stick with what I was originally questioning and interested in was the continuous token offering. I'm trying to understand. But given the background and given what you saw and given your background in venture and what you saw in play out in 2016, 2017, and 2018, why are you doing this? In terms of opportunities to generate wealth, is it opportunities to leverage a new ecosystem? Where is your headspace now that you've seen the good, the bad, the ugly? And then how does that lead into what you're building right now?
Yeah, so I think broadly, I think technology is pretty much morally and ethically neutral, and it's really what's done with it that determines those outcomes. And so people,
you're dealing with AI, I'd agree, but we're dealing with people.
Sure. Exactly. I think that's what kind of shapes what the outcomes are. And so, yeah, there's a lot of like reckless ICOs. There's, and a lot of, ones that are actually useful for things. I think Ethereum, for example, is, glad that it exists on this planet and was well capitalized. I think what some of the issue is that, like, obviously, like having an idea on a piece of paper and then raising $100 million is not a standard combination for success. I think on the flip,
It happens in Silicon Valley every other day. I've invested in over 400 startups in tech, and I never saw fraud. I never saw people deceitful. I never saw people literally pretend to have a project and run to the Pacific Islands and disappear. Something about that space that you've spent time in, it seems to attract a certain element. And what makes you think that today those people are not going to be leveraging a more legitimate way to deceive and fraud people?
Oh, I'm sure the people that have nefarious intentions will find every single way to defraud people.
Or is it that now that the rules are better understood, and that there's due diligence, and that there's requirements for transparency, and there's certain best practices that, for your investments, for deals that you take. Like I'm trying to get to separate the people from the technology, from how you look to deals, because if there's no filters put onto it of who can use a platform, if there's no filters put onto who can play, we may see a repeat of what happens until people are then prosecuted. And I would like to think that some of the Silicon snake oil salespeople have come and gone, and now we're focusing on the next big thing for them, while blockchain is living outside the hype curve. And now there's a chance to get the stuff really, the people serious about changing the future of finance involved to blow things out. Or is it that you just think that if it's so attractive, that anytime there's a gold rush, it's going to attract all people of all shapes, all sizes, with all different motivations and needs, and we're just going to repeat what we lived through? I'm just curious, like how, we've seen the good, the bad, the ugly. Some people were not malintended at all. Some people had legitimate projects, and people brought it to life, and some people stayed true to what they were working on. And the thing is, like when I invest in a startup, sometimes they're negative exits, but we understand that not every time people try a business will it succeed. So I take defense to some people who try use capital fundraising through an ICO legitimately, and it didn't work out because they were there with their idea and it just didn't work out. It wasn't like they were pretending to have a project, they actually did. And if this was a typical venture raise, whether it was early stage capital, whatnot, and it failed, it failed. And those who invested understood. Now it's different because the people who I know who invest are accredited investors, and we have all these issues with non-accredited investors and people who, Main Street gets involved. It's a different conversation. But I never really had any issues in any of my investments that I made in other people in the last 22 years. So when I looked at ICOs as an alternative source of funding for startup projects, I just thought it was just competitive to angel investing as a nice way for people to get involved. And then we saw the bad behavior. So yes, I think bad behavior happens, but if you look at some of the other types of the types of Reg A plus deals, you're now seeing what that can be tokenized. You're seeing all sorts of byproducts of the Jobs Act. I'm hoping that better diligence will filter out some people, and maybe not. Maybe it's just investor beware, and if people have nefarious intentions, that they will be prosecuted if and when that comes out. It just
Alex, maybe jump into the FF1 token a little bit more and sort of explain what you guys are doing with it and what you're thinking about doing with it.
Sure. So our thought is with FF1 token, so we're offering a token that can be bought on Liquid Exchange. It actually starts trading on February 25th. And from a token release standpoint, it's a bit differently structured in that there's, first of all, we've by design not sold it privately to anybody. And so I think what you see with a lot of what we saw with ICOs is like people sold it for 10 cents and then it lists for $2. People dump on retail buyers in the market, similar to what happens with IPOs in some cases. They get their exit before, the thing really even starts trading. So in this case, the cost basis for everybody participating will be exactly the same at the get-go. Additionally, the funds, we sell this token, which aims to replicate the way that central banks issue new money, which is that it's attached to some kind of asset or debt. And so the token is only sold, and then the funds, it's not used to develop a blockchain or used to develop some kind of new technology or dApp that nobody's ever going to use, or some fantastical new, unicorn on a pony riding a rainbow on a blockchain. Like, the point is, I know a guy, I can refer you. Instead, the money is put into both providing market making activities to basically support the price of the token, and then a portion of it is allocated to a basket of different investment projects in the blockchain field. So some of those are LP interests into other VC funds. Some of them are what I think of as like fixed income products. So like Bitcoin mining or Bitcoin lending, for example, things that have some kind of predictable return or quasi-predictable return. And then top cryptos. And then that like top 5 market cap crypto, Bitcoin, Ethereum. And then we rebalance that portfolio essentially mostly because of the volatility of crypto to meet certain portfolio goals. And so the idea is that the funds are, first of all, we're only selling tokens when there's real demand to buy it, not just to flood a market with overdue supply. And then secondarily, the funds are going towards actual assets rather than, parties and bloated salaries for a giant team of people.
How many people are involved in your company?
As employees, there's just Mark Fleury, who I mentioned, and myself. And then there's, we have some contractors doing marketing and technical work as well.
So you're launching on Liquid in Japan. Is that mostly the Asian market that you're going after there?
So Liquid in Japan, yeah, it's not available to US participants. We picked them because they're a highly more regulated exchange in Asia. I won't go into that, but we spoke to some others that were less regulated, let's say. Pretty much anywhere in Europe or Asia, you can participate, except for, even though they're headquartered in Japan, Japan has very tight restrictions around what tokens are approved for the Japanese market. And so Japan themselves are not able to participate.
Will the US eventually be able to participate?
I don't know Liquid's like plans or regulatory roadmap or the plans of the government of the United States regulatorily, but at this time that's not anticipated.
Got it. Are you thinking that the token will pay a dividend, or sort of the value comes from the market mechanics of trading, or the value of the assets behind it?
To buy and sell the token can occur on an exchange, or through a decentralized exchange if you bought the token initially through Liquid at this time. If you start providing a dividend or redemptions or things like that, then you're bordering into securities law, which, to be listed on Liquid is not feasible.
Is there anything you have there to prevent secondary trading on markets where you don't want to be present with investors in countries that you don't want?
No, we've been advised by our attorneys that, it's our responsibility, that primary offering. And then if other people take actions after the fact that are not in compliance, it's outside of our domain.
Really? So if you launch on Liquid and you don't want, let's say, no US, no German, no Australian, no Japanese, no Canadian, or whatever the rules will be there, and somehow through some nefarious means, through a VPN where someone pretended to be someplace else, an American makes an investment in that, and now they're trading it. Well,
if someone's committing fraud, then that's fraud.
Right.
If we caught wind of that or were aware of that, I'm sure
down, I imagine, right?
Something would have to be done, but I don't think that I think if we knew it was going on and aided and abetted it, that would be problematic, but I don't think it's our liability if other people are lying about their identity,
Because I've seen some, chats about people talking just about that exactly. And so in some cases they put the burden on the issuer, and others, they put the burden on the people who committed what turned out to be a bad thing. And so it's dicey. So, for the next 12 months, the next 24 months, what is your core business? What do you, when you were to talk to the people outside of the sector, what is your core business? Are you looking at yourself as an investor in other deals? Are you looking as to be, so that if I have a project, am I coming to you because you have a source of capital and you're looking to invest in certain types of deals, or how do you, because you wear many hats. So what is your primary and what is your secondary roles that you see after this launches?
So I think one is, the way I think about it is creating real demand. So that's through getting onto other exchanges, creating awareness of projects, which comes through both the success of it as well as we have some investment partners, Spice VC and Neo Global Capital and some others, as well as one really amazing fund that we can't publicly announce yet. And so some of that, both through those networks and through the quality of it, attracts demand for the product. And so, I think a combination of those activities, which is a blend of probably the token activity and behavior, the partners that we have, and just getting onto other exchanges to find more users.
Are you specifically looking for security tokens to invest in? Have you been evaluating a lot of those projects, or are most of them sort of on the crypto side?
It's funny. Well, it's funny. So we're not evaluating individual investments into companies. We invest into funds as LPs. A previous company, Atomic Capital, we were looking at a lot of individual security token projects. And first of all, 99.9% of them have a ways to go or don't really make sense. But then there's so much, Jeff was saying, so much other stuff going on. I don't think we could do a good job of evaluating every single project. And then, I don't know. I'd be curious to discuss it, but I think when I encounter most security tokens, they're either, American or US ICOs that just realize they're out of compliance now and need to do a security token offering, or secondarily, projects that just couldn't find funding elsewhere or want to get retail terms on wholesale real estate or something like that. And so they start thinking they can chop it up in this magical way because they saw ICOs perform, which I think a lot of people, you hear noise about people launching security tokens or companies creating security token platforms because it's very marketable. I haven't heard about a lot of fundraised successfully security tokens.
Jeff and I were hoping to see some people issuing security tokens that were outside of the blockchain space, because it seemed like everyone was trying to do a blockchain-based idea in the security token space to overcome the hurdles of the ICO problems. And it always sounds good from a marketing perspective, but then when you get into it might not be the best investment.
Yeah. It's I had a security token platform and we sold our own equity prior as a security token and raised a few $1 million, and was almost like a bad false positive, because once you move out to any other company or anything that's not directly that thing, it becomes a very difficult use case. If I had the most amazing real estate that was available, I would just sell the real estate. I wouldn't complicate it with all this stuff.
Or need to complicate it. Just for the sake of complicated. So all right. So it sounds to me like you're basically acting as a fund of fund, that you're investing as an LP in other funds. So you're raising capital and investing in other funds in the sectors that you feel comfortable will give returns. So another place where you could issue security tokens or some type of, or just do cash for that, for dividends. How are you planning or thinking about dividending your investors in your who are buying in? Have you thought about how you can do dividend distributions?
Our company proper is a LP in funds. Token holders don't have a direct claim or right on anything. Again, otherwise it becomes a security token and isn't compliant.
Wait. So what? Wait. So you're the LP. So what are the holders of your token? What are they relative to you?
Token holders.
So what is the benefit of the token holder?
Well, so specifically who's an LP is a foundation, and the foundation's sole purpose is to support the price of a token. And so it's basically capital in a treasury.
But I'm not getting, I see, I misunderstood. I thought that if you're investing the funds generated by the tokens, that we would be getting distributions from deals when they had exits. But you're saying that you're keeping the exit value. And
no.
So I don't have to worry about NAV or anything else. It's just It's just that it all goes to you.
No, there's a foundation that we manage, but that doesn't belong to me. And if there was an exit from some kind of company in that fund, the funds would go into that foundation. And the purpose of the foundation is to market make and support the treasury of that token.
Right, but you don't foresee the foundation turning around and doing a distribution to the token holders.
You can't like legally do a distribution. That would be a dividend. But if somebody wanted to sell the token and there was increased capital in that foundation, it would make sense that the price of the token would likely be supported by a larger treasury.
Yeah, of course. I mean, yes. I had just thought that. So I see what you're saying. So why? So given what you know, because you're not just anyone, and you have the background in all of this. So what would be the fallacy, or what would be the risk of actually doing a fund of funds, where you are the LP, where let's say you raised X amount, I don't know, whatever it is, even $1 million, you do it as a crowd, go out and do a crowd CF and take $1 million from unaccredited investors, and you turn it into a fund. And then you turn it into as a security, and then you invest as you're the main investor, and you invest in a fund of funds, that $1 million in a micro way. I do micro investing, so micro angel investing or micro fund investing. However, you have friends who are LPs; they'll take your money, and why wouldn't you then dividend them back? That to me seems more exciting and interesting and diverse. You get diversity in terms of the types of things you could invest in, and maybe that'd be maybe not the primary business you're in, but a secondary one, because you could that actually gets hypish, but yet it's real, and you then could allow for market for accretion of value, and you would if you are playing in the security side and you regulate it, and you have the unaccredited investors who came in through CF. I think you're okay, but you need an attorney or two or three to figure this out. I just thought that I had thought for some reason you were going down that route, which you're not. But it seems like you could figure out how to do that in a proper way that is compliant and also has great returns. And that way, your ability to pick funds to invest in and your ability to influence what deals those funds invest in, as far as projects or just regular investments. That gets exciting to me, because I had thought that the existence of security tokens would be competitive to venture funds. And I met with a bunch of VCs 2018, and we had conversations specifically about how startups would raise capital in the future, and not the ICO route, but the security token route, and actually doing it the proper way with a Reg D, Reg S, Reg A+. And they saw that too, at least a few that I spoke to. And so I had thought maybe with your background and your experiences and your ability to see the future, that might be something which you'd be interested in pursuing as a parallel path to what you're already doing.
So, I mean, I think two things. One is, I think that, to raise $1 million and pay lawyers, $150,000 to figure out how to do it becomes difficult.
Probably less than 100, probably about 50,000. I've spoken to a bunch of lawyers about this specifically. Sure. Not that expensive.
Well, so even 50,000, and if you're managing $1 million fund and you're taking 2%, you
can do that 10 times. You can do that 100 times. There's no law that says you can't do this.
Yeah.
You can do 10 funds in parallel.
Yeah.
So you could have 10 million. You could raise 50 million, and they're all separate. But you're managing all on top, but they're all separate ones below.
Yeah.
All of a sudden, you get the leverage of the crowd. So it's not just a single, $1 million fund. It could be $10 million funds.
Yeah, I think like City Block Capital, I think was looking to had intended to do something like that. I think, Reg CF, like it's
one would be separate, have its own MD, its own structure.
Yeah.
But done in a way so that you, the visionary, could actually decide what funds the various fund A to fund Z invest in. So you may be you may represent 15 or 20 million of capital, even though you have individual LPs in each of the other funds.
Right. So I think some of the interest of what we're doing at Two Prime is to not have a fund that value is led by a NAV, but to actually have the reverse causality and see that if can we catalyze the interest in speculation on a token, but instead of it just blowing up into hype backed by nothing, can we grab that energy?
No, that's why I like the asset, but I like the idea of investing in real assets and invest. And so for me, it's hard for me to separate NAV from assets. I mean, if you look at net asset value, it's net asset value. It's, it's different than no asset value, right?
Yeah.
So because you can write NAV, because for me, for a while, a NAV was no asset value.
Yeah. Well, so I think there's, on one end of the spectrum, there's like Bitcoin, which has zero underlying asset backing. And it, as a result, pure supply and demand dynamics on its price. And then I think on the far side, you have stable coins where it's backed by $1 1-to-1. And there's,
well, no, unless you're talking about Tether, in which case it's not. And then there you actually have no asset backing and no proof. The people at Tether have refused to publish their bank statements and refused to be transparent. USDC, sure, but not Tether. So
let's use USDC as an example of, actually fully backed and legitimate on the far side of just on the spectrum of 1-to-1 backing and you can think of Bitcoin as 0 to infinity backing to price potential.
Okay.
Right? And so I think there's something essentially in the middle where you can preserve that kind of speculatory possibility, but it's not just hollow air at the same time, but that the speculation leads the price and then the fund runs behind it. I think this is what EOS has done, what Tron is doing, what Ripple is doing. And so we call this a continuous.
I have no idea what they really were doing, but this is now the story that they've become.
Fair enough.
Buying a large size shoe that your foot is too small to fit into it, and then you grow, and then you create a backstory that fits. That is why your foot fits in the shoe now. Yeah,
I mean, I think we all have. I mean, first of all, I think everybody maybe isn't fully aware of what's going on in the midst of it. I don't know, in my life, sometimes I look back and have a different narrative as to what occurred than what I thought was occurring at the time. So I don't think there's anything necessarily wrong with that, unless you have you're just falsely lying, but things evolve over time. And so I'm okay with that. And then I think that, those companies have created billions of dollars out of thin air, essentially. And I think that is a fascinating, interesting thing to occur outside of the, government banking industry.
Not everyone who changes their narrative gets away with it.
Well, sure. I mean, it depends. If someone says, "Oh, I'm going to give me $5 million and I'm going to make a shoe company," and then they turn it into buying an island for themselves, there's boundaries around honesty and integrity and oversight. But to
your point, though, right? If we started out being a shoe company and midway we do a pivot, now we're a sneaker company, but we realize that doesn't work, so now we have to go into leisure wear. I mean, there are places where you could actually turn and be true to the mission and true to yourself. So it's not about, we didn't start the business to take anyone's money, but we wanted to change the world, and we wanted to take our passions and take the vision and leverage the people to make a change. And just turned out that the market segment we were in was not right for the opportunity. So I've seen a lot of pivots, and I think pivot is part of life. I mean, we change ourselves. So our narrative in that regard changes because we discover who we are, and that we now have that 2020 foresight into who we were and who we're becoming. So that works completely for me. It's different than people with intention and purpose of doing something not so cool and having amazing success, and then trying to create a story to explain that and maybe backpedal certain things. That's all. But it's you're in 2020 now. I like what you're trying to achieve on the LP investing side. I just think that you have the brilliance of a mind and an opportunity to do a lot more, maybe outside the purview of this current activity, but to take some of your life experience of what you've seen in the venture world and how you've seen in the crypto fintech world, and create things that haven't been done yet that could perhaps leverage the best of both worlds for yourself and for future investors.
Alex, do you think that security tokens are something that will be coming back around, or just they're sort of delayed right now? Or are you sort of past the idea of thinking about security tokens? Like there was ICOs, then there was security tokens, and now there's, funds.
So I think two things. I think that one, I think the companies that a lot of it's a question of business models. So I think Securitize, for example, it seems to, I see like a new company has invested in them every single day. It seems like, and I think that's because their model is not really commission based or tied to the success of the companies they work with, but they basically charge a fee up front and they get their cash, and it's kind of separate from the success of those companies, which seems to be the model that works the best. And I think that my understanding is, they have a transfer agent license. Having worked with transfer agents, I think it's ridiculous to pay these companies to maintain an Excel spreadsheet. And that's really where a company like Securitize is going and what they're displacing. I do think that security tokens or, blockchain based securities will come back around. But I believe from institutions where like the economies of scale of like, keeping track of 1 million different, equities or large scale amounts of real estate, the incremental benefit and cost savings of doing that in a blockchain rather than paying some transfer agent starts to make sense. But I think like selling an individual house or selling like equity in a startup for $1 million where there's still like no real liquidity becomes complicated, because like if I sell, Series A equity, then the rights and permissions are different than Series B equity, which.
But even if but let's say we're just doing common. So when I invest in startups, usually I take the same stock as a founder.
Okay.
So we're dealing with founding shares, because if I were to invest, a VC comes in, they're going to rewrite my rights anyway. So if I'm the first investor in a deal, or I'm basically have 3 friends starting a company and I was a 4th person, I didn't start the company. Well, I gave them the capital to start the company.
Yeah.
And so I was on par with those folks. And what I'm talking about is doing crowdfunding to provide the initial seed capital. It's the pre-seed capital for the business. This is before the Series A, B, C, et cetera. This is just this is my dream. These are my friends. This is the team. Right. And we're going to build something amazing. And we need some capital in order for these people to quit their day jobs. I can afford not to have, this is my job. This is my life. And these other folks need to join the team, and we want to have some supplies. We need to raise $1 million.
Right.
I believe with crowdfunding, you can raise $1 million every year, and you're actually not. You actually can do a crowdfunding plus. You could do a Reg D or a Reg S, and Reg A plus, and none of them take away from the ability to do either. So,
yep.
So as a startup, I can go to the crowd. I can go to accredited investors. I can look overseas, and do fundraising outside the VC realm. But in the end, create a product, that a way to represent my equity. Because if, I can tell you, after you invest in 400 startups, you want liquidity before the company's ready to be liquid. Occasionally, I invested in companies that became real businesses. I call them candy stores. They became businesses for the owners, but I never had an exit. They're still in business. Right. They're in business now for 17 years. They don't issue dividends, and they will one day retire and kill the business, and I'll have no exit. Right. And so I would like at times to be able to sell my shares in that business, but the owner of the business isn't willing to buy it. But maybe somebody outside of me, of my world, would like to take my position. So having tokenized my equity position in that business would allow someone else to come in and take my shares in a way that's better than now, because I'm completely locked up and with no sign of ever getting out until there's the business ends.
Well, so I guess my 2 questions about that would be, one, I think crowdfunding can make sense, but like when's the situation where crowdfunding as security has some benefit to the company raising the money? It would have to be that they can raise better, right?
Well, basically, typically I'm giving up 10 to 15% of the equity.
Uh-huh.
I'm giving up less equity than it would to a VC.
Okay.
And I'm able to charter my future. A lot of this hasn't been done yet. We're still in the early stages of when the internet meets crowdfunding meets regulated security offerings, and being able to do that. So it's different than, Spice VC coming in and investing, a tranche into my business.
Yeah.
And the fact that their LPs have all been tokenized and they get distributions. I understand their model quite well.
Yeah.
I knew the founders of that fund and the people who came into that business. I was just curious more of taking now that we've seen the last 3 years of these things evolve, looking, from 2020 forward, will there be, what would be the, I'm looking for things that will accelerate the security token industry. Like what's exciting. I agree with you that there's no need to tokenize a house. We could just sell the house. People were talking about tokenizing shares in vacations, when people basically have, every once a year people have to go to Florida for 7 days because they bought this 25 years ago in their family and they still own it and they can't get rid of it. So,
Yeah.
but it's something that's creative beyond the obvious. So it's
I hear you.
one of my questions.
So two things. I hear what you're saying. I do think, like, for my previous company, we raised a few $1 million and I gave up no board seats. I think we had a higher valuation and a lot more freedom as an entrepreneur. I don't know that that was necessarily good for me. I probably could have used more guidance and maybe, in some ways it might have been good. And I think also we raised at like a $34 million valuation, which I was able to do, but like no one, when we needed more money, no one was that excited about it. And then you're looking at a down round, it becomes problematic. And then I think I'm also looking here online on stomarket.com, which has live data on trading volume.
But you learned from that, right? I mean, even though you learned, so even though you may not have, the point is that we go through learnings, right? Because if you knew that if you raised at 34 million pre and you can't get more money and you have to do a down round, you might have raised it at a 15 million pre instead.
Yeah. Right. So I learned stuff, but I'm not sure that the investors were so excited about that. Learning.
I have invested in first time, second time CEOs. And maybe it's sort of like you being a rock star. Maybe the first or second album you do isn't your album, but the third time you do it, it's amazing.
Right.
And so I've gambled on people early on, and I found people early in their careers who later on became true rock legends. And so I don't give up on people just because they're learning.
Yeah, I've seen a lot of companies coming through doing this Reg CF model to raise the first $1 million with the intention of spending most of that money doing a Reg A the following year. Right. As well as operating the business. So I feel like that's a pretty good, I guess, a 2-year plan to show that you can sort of come out of the gate, work with a little bit of money, and hopefully set the right valuation on that CF so that the Reg A makes sense for the people to continue.
Yeah. Well, so I think, before we move on, the other thing I want to just talk about is I'm looking right now on this website, stomarket.com. Here, let me quickly share my screen. So this is, real daily trading volume of security tokens. So the highest traded token, T0, is $13,000 in real liquidity. And then below that, you're talking about hundreds of dollars. So like where, to go back to your point, Jeff, of like, oh, you want like earlier liquidity out of an investment. I mean, in practice, what that's going to require is, I don't think it's going to happen on the market. It doesn't look like, at least not today. I mean, you're still going to have to go track somebody down and try to find them that wants to buy your shares. And then at that point, you could just paper it. Like you wouldn't need it as a token,
Practical reality. Thank you.
So I think, that may pick up over time.
I thought that was actually 13 million in trading. I didn't realize it was 13,000.
Yeah, $13,000.
Zeros were being dropped off.
Right. And part of the issue is because like getting onto T0 to even trade the thing is like a nightmare. Yes. And then I think also like Reg A Plus, I believe Blockstack did the first Reg A Plus or one of the first, and it cost them like $2.5 or $3 million just in legal fees to do it. And then they raised like 23 million, something around that. And they're obviously the first and a pioneer, but not many companies are capitalized to spend $1 million, $2.5 million on just the legal fees to do something where you could just avoid this complication. And like, I think lawyers enjoy all this stuff because anytime something's new for a lawyer, I think they're very excited to start having you pay them to educate themselves. But it's not so good for the businesses. So like, I think the excitement around Reg A Plus is that the issue is like, if you have a security token that can't be held by retail, it becomes super restricted in what it can do as an actual blockchain-based product. So Blockstack makes sense in that you need a Reg A Plus for a token to function as both a technical piece of equipment and a financial one at the same time. And so that's the only way you get real distribution in the United States. But the path to get there is pretty complicated, and they're in a pretty privileged position to do that. And I still think they're struggling. It doesn't seem like they're knocking it out of the park. And I mean, they were trying to raise 50 million, they raised 23, and they're backed by some of the biggest VC companies in the industry and more broadly. And so if they're struggling, it doesn't look good for like the regular guy.
Got it. That's awesome, man. So where can people follow you on social media if they want to keep track of the project and see what's going on?
Sure. So, I mean, our website is two prime, TWO prime.io. I'm on Twitter at Alexander S. Blum, BLUM. The company Twitter is 2_prime on Twitter as well. I have a Medium account and have some stuff in CoinDesk coming out soon.
And if people are looking for money?
If you actually go to 2prime.io/partner, there's an application to apply for, defines kind of what we're looking for and investment sizes, and then you can submit a deck and basic information, and somebody reviews and gets back to everybody who applies there.
Awesome. Well, I appreciate the time today, Alex. Thank you very much.
Yeah, thanks guys. I enjoyed it.
We're grateful for your time.